Sandy is a staple in Westchester's angel investment landscape. Sandy has done so much. What's really cool about Sandy is that he had a corporate career and he made a lot of money, obviously, or he wouldn't be doing investing, right? And he started Westchester Angels, and he's the co-founder of that. And he's now helping entrepreneurs. So he went from corporate to entrepreneurism, just like you did.
Huh.
And
I'm following in his footsteps.
And so he's here today to help the entrepreneurs on the show. And also any entrepreneurs that have questions for him about how to move a product forward, because it's really what he's helping people do, is taking their ideas and inventions and getting them into the marketplace with this angel investing. So welcome, Sandy.
Yes. Thank you very much for having me, and for the most kind words, Elizabeth. Thank you very much.
Well, that's typical of Sandy. So he's very humble guy, despite mountains of talent. So so anyway, we're here with some student inventors, possibly considering careers in entrepreneurism. What would you tell them?
Well, you know, the angel space is it's a fun space for investors, because we have access to tons of new ideas and new products, and it's a helpful space. You know, angel investing comes right after friends and family if you're raising money. And Uncle Fred gave his niece money because she loves him. He loves her, whatever. But we're the next in line. And angel investing, we take on the most risk. On average, 60 or more % of angel investments will fail across the country, because we're early stage, sometimes pre-revenue, most of the time where there's just a little bit of revenue coming up the right side of the hockey stick. So most all angel groups in the area compensate for that by doing extensive due diligence and adding as much value and help as we can. As you go up the ladder, if you're fortunate enough to execute and go up the ladder to the VCs and over and above that, it loses the personal touch a lot of times. It's more business oriented. And I could take your viewers and Noah and Greta through the process, if that would be helpful.
Sure, absolutely.
Yeah. So if you're looking for angel funding, there are two platforms that you have to apply to online. And this is the first step for all angel groups. You know, I lead an initiative that brings all the angel group leaders together in the tri-state area, New York City area. So I'm intimately familiar with all the angel groups in New York City, in the area, about 15 or 20, from the Golden Seeds, the 37 Angels, the Gangels, and the Harvard Business Alumni of New York. Intimately familiar with all of them, but we all have the basic same process. The first is to apply online on one of the two platforms that are most widely used. The first one is called GUST, GUST.com. And the second most popular web platform is called Proseeder, PROSEEDER.com. So the first step is to apply online. You put your slide deck on, you put your financials. It'll take you about an hour or more to apply online. And we advise startups to agonize over this application, because it's got to stick out. Most angel groups get about 50 to 150 applications a month. Something has to stick out. A couple of red flags to avoid: don't use a Gmail email address. Make sure your URL is the business that you're using. Greta at xyzbusiness.com. A couple of other red flags. We like C Corps as compared to LLC, so we avoid the dreaded K1s. Your slide deck has to be done really, really well. Angel investors don't read business plans. We read slide decks. And we have a pitch guide that helps all startups with their slide deck. So once you start to apply online, you're going to be judged. If you get reached out for more information, you have to reply in a timely fashion. And your only objective, once you start the process, is to continue the conversation. That is really your only objective. So from Gust, you want to be tapped to be screened. All angel groups will pre-screen startups. So Westchester Angels, we pre-screen 8 startups in order to select the 3 that will pitch to our investors. From there, should you make it through the screening and make it through to the investor meeting, your only objective now is to continue the conversation and get into due diligence. That's when we really kick your tires and go into depth about your background, your business plan. If you have revenue, we prefer to talk to clients, because every startup thinks their platform or product is the best thing since sliced bread, and rightfully so. But market validation comes with revenue. That's how it happens. And then from there, should you make it through due diligence, then there's the dreaded document review. And sometimes we see some stinking documents. And that's basically the process, Elizabeth and Richard, of the angel investing process.
So can people approach a number of different angel groups? Like, let's say they go to you and think they're hitting all the New York groups. Can they go to New Jersey, Florida, Colorado all at the same time?
Yeah. So really good question. Thank you. So if you're going to raise, let's say, about $500,000 or $1 million, we advise startups to raise enough money that'll last them at least a year or year and a half, unless there's a significant trick, you're like getting a big deal that'll increase your valuation. Because raising money from angels is not easy. There's a gestation period. It's going to take you months to raise money. And if you're raising $500,000 or $1 million, you're going to have to apply to many different angel groups. Angel groups might typically invest anywhere from 50 to 150, which is our sweet spot. Some angel groups could put more money in, like some of the more prominent angel groups could put maybe a couple of hundred in or more. But we sympathize with the time it takes for startups to raise money. We advise startups to catch up on their sleep when they exit, because if you're the founder and you have a very small team, raising money from angels is going to take time away from you running your business. You really have to understand that it's not easy, but there's a lot of money out there for the startups that have a really good business plan and can solve a problem. So we sympathize with that. And we respect startups at all times and add value at all times, whether we write a check out or not. We want to help startups succeed.
And so different angel groups too have sort of different interests, right? Some are socially oriented in part, for particular issues. Some are interested in tech. Some are interested in, Internet of Things types of inventions. So some of them have, specialties. So it helps to do a little bit of research too on who you're going to be pitching to, because if you have a new consumer project and you're pitching to a tech group, you may get a referral out of it, but you're probably not going to get any money, right?
Exactly right. You have to know the group, and it helps you to understand the background of the group and their karma, if you will. Like the 37 Angels, they are a group of women investors. You have to be female. You have to be from Venus to be a member. They do like a mixed C-suites, and they have over 120 members now. The Golden Seeds, one of the more well-established angel groups, only invest in startups that have a female in the C-suite. And the Gangels, I don't even know what to call the Gangels anymore. They are the LGBTQ plus angel group. They do have an angel fund, but they become more of a robust organization that is investing in startups that are a little bit higher above the ladder over angel groups. But it's really important to know who you're applying to, so you can have an intelligent conversation. Check out their website, check out, what their motivations are. And Richard is right. Certain angel groups have certain industry focuses. like the Westchester Angels, we're industry agnostic, but we will not consider biotech or medical devices because we just don't have that expertise in our membership.
So Sandy, this is a burning question for a lot of people, I think. So how much money do you have to get from friends and family before an investor will look at you?
Well, that varies. If you're fortunate enough to have friends and family that could kick in some money to get you bootstrapped and get started, you have that privilege, and it is a privilege. We don't really have a requirement if you are, if you've raised some money from friends and family, that's great. If not, we certainly will not hold that against you. More and more angel groups are looking away from pre-revenue companies because of the added risk involved. It adds more risk to an already risky investment. Our sweet spot at the Westchester Angels are startups just coming up the right side of the hockey stick, where there is some revenue. That's market validation. It de-risks the investment slightly. That there is some revenue there, and we could actually talk to clients when we get into due diligence.
So let's take an example where somebody has gotten to the due diligence stage. What kind of things do you look at that push you over the top and say, okay, we're going to make an investment in this company?
Right. So before I get into that, the most important thing when you create your slide deck is to create the slide deck from your audience's point of view, not yours. Just pretend you're sitting in the audience. You have you don't have that expertise in the food space or whatever. What do you want to hear from a pitch and a slide deck that's going to get you interested? Make sure you have the terms of your raise in there, an exit strategy. And we don't really want to hear that you were motivated in third grade to create this thing because, whatever, make sure it's from your audience's point of view. The most important thing in due diligence, there's a couple of things, Richard. Number one, be 1000% transparent. Once we get into due diligence, angels, we could smell stink a mile away. If you're good at something, if you're not good at something, be honest with us, because that's the only way we're going to be able to help fill in the blanks of what you're good at and what you're not good at. I always ask in due diligence for the founder, tell us what you're really good at, what you really stink at, where you need some help that we might be able to help you. The next thing is we need to see a business plan. Are you solving a problem, or are you creating another Me Too product, like another food that's going to go on Whole Food shelves, or are you solving an industry problem? Angels really like to see startups that are solving some sort of problem out there. And you would think by now all the problems have been solved in the world. Well, no, they haven't. And we run into companies that are, for instance, solving a problem in an industry. A lot of industries still use Post-it pads and manila folders. We run into startups that are trying to automate those industries from the back end. And as the due diligence goes on, we're going to find out about your background. And another really important question we ask, and this is a difficult question, especially if the startup has a medical background and is creating a platform for doctors' offices, or if you're an engineer and you don't have business experience. Are you willing to step aside as you scale your company for another CEO that's an experienced business leader to take over the business? That's a really difficult question to ask, and it's a difficult question to answer. But what the answer to that tells investors what your motivation is. Is it about your ego, about your own self, or is your main motivation to grow and scale this business? So those are some of the things that we look at.
So can I follow up on that a little bit, Sandy? So let's just pretend that Fireside got a bunch of money. That's my business. I'm still doing friends and family, mostly family.
Good. Well, you got a good family there, right there, you know.
So let's say I admit, okay, I'm an analytical chemist by training. I never went to business school, whatever. So I'm going to bring in a CEO. And then what is my role? Do I stay on the board? Like, where do I go?
I'm sorry, if you're the founder,
So I'm the founder, but I realize that I am not like a business whiz. I get some big shot from Wharton who's going to come in and run the business for me, right?
yeah, yeah.
So then where do I go? Do I go on the board? What
It
happens
really
to me?
depends upon the business and the structure and what the founder's strengths are. The founder can't take a back seat. You know, the founder, this is personal, 99 times, it's a personal thing. And if they onboard a CEO with business experience, the key is that the new CEO and the founder have to mesh. They have to have a good relationship, and the new CEO's talents have to mesh with what the founder's experiences and what their weaknesses might be. So it's a team. You know, the founder's never just going to take a board seat and sit back and have maybe four board of directors meetings a year. It's really about making a good fit to complement the founder on what they're weak at.
That's great. So Chaim had a quick question for you, Sandy, before we wrap up this segment.
Thank you, Mike.
I'm just kind of curious, I know we talked about friends and family and sometimes even showing a little bit of revenue. I know sometimes VCs look at successful crowdfunding campaigns. Is that something you guys ever consider? What's your feeling on people doing that beforehand?
You know, if you want to crowdfund, God bless you. There's, this is not 30 years ago. There's a lot of different ways to raise money to get your company bootstrapped, to get started. You know, friends and family first. If you want to do a crowdfunding campaign to get money in the hopper, that's terrific. But angels, we don't crowdfund, because there's no due diligence in crowdfunding, so should you apply to angels, the crowdfunding would be a separate conversation.
I'm sorry, Sandy. I think I probably didn't state my question the right way. I meant, do you look at if somebody had done a successful crowdfunding campaign, like a Kickstarter, as something to show proof of concept, to show the potential that there is a market for it, and then it's something that leads to maybe additional interest or possible interest from the angels? We
take it with a grain of salt because there's not any due diligence with crowdfunding. You have people investing relatively small amounts of money. So we look at that as great. You've got a friends and family or crowdfunding, but that's not going to interfere with the amount of due diligence that we do. And by all means, if you don't have friends and family that could kick in, some zeros, why not crowdfund to get the ball off the ground? But the process, Chaim, is still going to be the process for angels. That's not going to be interfered with a crowdfunding campaign.
Of course. All right. Thank you.
And that was a great question. And we'll continue on with Passage to Profit after this commercial message.